The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is, let me just get this chart right. This is the Tiger Technicians Hour on this Friday, the 4th of October. And we're looking at the Dow of 213 at 42,225. So I need to just show this pattern right here. I'm not sure this is going to work because it's now it's been occurring for about the past, I'd say, 2 months or so. And that is where we have a left side high. There's a pullback, and then you get that final peak that goes to a D, or just a letter above it. There's Chapman Wave Technical Friday, so we can talk Chapman Wave notations. And then I'd said, about a week or two ago, I said, I think we're coming to an internal high with that very sharp sell-off. Remember, was that a couple of Fridays ago? Whatever it was, or was it Wednesday? Anyway, there was a sharp pullback. That pops up to a new all-time high at 42,299 on the 25th of September. And then that day closes sharply lower. But the next day has an inside bar. Following day makes the all-time high on the 27th. Yeah, 27th. And then we start a decided pullback of time rather than price. Look, the 9-period, the green 9-period moving average is way above the 14. And I call this the Chapman Wave Dark News Index, DNI. And I use it only with the Dow, just as with the Chapman Wave Trend Gauge. I use Richard Arm's Trend Gauge as a good example of two level. Only use the price at when it's at a high, a particular above a certain level or below a certain level as indicators. So here I only use this. I have drawn in the inside track. I don't usually do that, but it was so obvious. I needed to do this up channel. We broke out of it. That becomes support. And in the meantime, the 9-period moving average is really your first key support in the Dow, and that is at 42, if I can read it, 42,092. So my impression right now, so let's get out of this. So in other words, there's a chance that we've made, I always talk about the earthquake and the aftershock, that was the earthquake right there. And here's the aftershock. It's just on a very much smaller level, a micro rather than macro level. We had it before, back around about the end of August. Now I'm saying that I think this is the same pattern that I'm looking at, which is why we became a bit cautious. We did have a short position on the exact day of the S&P high. Then we added to that yesterday with a rather aggressive move, but I didn't want to mess around. We took a less than a 1% loss on a 3 times short position in ETF. That's really remarkable that we could control the loss. But I would really have liked to have kept it. So we've kept our more conservative short position. Here's the reason why. And I had an email that said, and I think it's very pertinent. It's very I think it speaks to a particular issue, but in the meantime, I'll tell you what it says. It says, Basil, these digestive phases should be renamed buy the dips. The terminology has kept me from buying the SQQQ many times over the years, unless there's a significant drop coming, and that's an observation. Unless there's a significant drop coming that the Chapman Wave is predicting, forget the shorting the market and focus on adding to your winners and buying new. Digestive phase equals buy the dips equals much better strategy. We could have added to our IWM. That's the IWM is the Russell 2000 small caps, and others this past few days rather than taking bits off. Okay, so I wanted to just read that because I don't often get input on my work in the sense that you should do this because it could be a little better. I do get it every once in a while. I always listen to it because you're always learning. It's always very important, especially when it's from subscribers. It just helps you to maneuver in a way that makes sense at a certain level. But here's what I'm looking at. Because I've identified Chavwave instant restart, that's within 3 bars, there's a new recovery high after a peak D, and that spike on the 27th of September to the 42,628 level, and then the pullback really wasn't the pattern that I always see for an instant restart, and that makes it suspect and makes it much more likely that we've seen a peak F right here, and that there's a pullback coming. And last night when there was news about the strike being delayed, isn't that, I mean, it's definitely not political. The strike being delayed to be negotiated in January. I said to myself, that means we could have a pretty decent pop because that price, let me just show you this right now, because, oops, not that's this right here. I mean, I wanted to do this today. I'll get to it. That's with the Chapman automated resistance and support levels. So we were right there. Look at this chart. This is the Dow. The thick gray line is the intraday move of the Dow. The 2 moving averages here is the 9 and the 14. When the 9 moves over the 14, it changes from the 9 is always black, and it changes to green when the faster moving average goes positive, and it goes to pink when it goes negative. And my thinking was 2 days ago that if we were pulling back, we could start to see the 9-period moving average weaken a little bit, but in fact, we might be seeing something that takes a while, and then there's one sudden bad day that takes the green 9-period moving average to pink, and the market, now the Dow is down to 41,800 or 41,700 level, and then we have to reassess. But instead, when they discuss the strike, I thought, oh, well, that means that we could keep moving sideways. So I have to say, for the stop on our SPXS 3 times short, I need to tighten it up a lot because we had a little bit of a profit, and I just don't want to mess around. For the other one, we're in a really good point. I can widen it just to say it's an insurance policy there, a directional and insurance policy. But here's what I'm looking at. You see, now I'm going to move this out. You see the way the price in the Dow is deflected. It's up 135 right now. And the 9-period moving average is still way above the 14. That's just telling me that there's internal strength. So going back to that, the comments that was made about buy the dips, I wouldn't have disagreed with that at all, other than if the jobless number that came out this morning, what is it, 40,000 higher than expected, if that had an effect on the market that was negative, it would negate anything that the delay of the strike could do, and that maybe we could pull back, and I wanted to be in that position. So right now what we're doing is we're looking at a sideways consolidation, which is kind of what we've been looking at for a little while now, and it's up. I want to see where we close on this time. Here we are. I'm right back. How's the time? Dow's up 27, S&P's up 19. And we'll go through the indices.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so we're looking at the Dow right now for 177, watching this very closely because so far, let's go back to this just for a moment. That's that chart right there. So far, look, the 9-period moving average, the price is way above the 9-period moving average. Let's go to the SPY for a moment. The SPY daily, same thing, got a deflected to the upside. It's up to 77 in the SPY at 570.54. That means the SPX.X is trading up 25.86 at 57.25.98. Again, deflected, but this is also where you start to see the chance of a right shoulder failure. That makes it like a dreaded H pattern. So that's a possibility, but all the technicals are so far. Look, yeah, the QQQ, same thing, deflected higher. That's a good sign. It's done it before, and then later on, it comes down. So this is a work in progress, and I'm just saying that, and I mentioned this over and over again for the past, I would even say 2 weeks, that the upside is fairly limited. Downside, in a sense, is limited, but I was anticipating that we could see lower highs and then slightly lower, a little bit deeper declines as we make, and we start to do that, slightly lower lows. But we'll see what happens. IWM now, this is going to be very interesting because look, the IWM, the Russell 2000, using just as one technique, using 3 lines, that's the price and the 2 moving averages, up 292, 219.04, and it is making lower lows and lower highs. So this is a very important rally, and it's very important by Tuesday or Wednesday next week. Where are we? Because under these conditions, we just also do the SMHs. So it's really important. We have to monitor the SMHs. And if you can see, they basically have gone down, made an H pattern, made a successful retest of the left side low. And now we're going to see, does it make a second H pattern? It did go above the left side arch, which is really important, but it couldn't hold 2 out of 3 consecutive sessions above that level. So now what I'm looking at is within the context of the semiconductors, and let me just go back to the major charts with the daily, weekly, monthly. Look, SMH, this is the Van Eck Semiconductor ETF. Oh, did I do something wrong again? Yep, I did. Click. There it is. Okay. SMH. There it is. So it's a red candle, but it gapped higher. Yes, gapped higher. In fact, it opened at 249.21. Has a low of 244.33. Trading right now 246.21. So you can see that if you're looking, this is the daily chart. If you're looking at the weekly chart, it's gray A, gray B, but it's still stuck in that narrow range. And the 9-period moving average last week and this week are green. That's green. The 9 is over the 14. And monthly chart D. But I usually like to look at the semis leading markets up and leading markets down. Right now, it's just saying we had a spectacular move going from the 83.49 level back in 2022, October, I believe it was, going all the way to the most recent high of 283.07 in July. We were having this is what you call a digestive phase. Now, I don't want to go through all the different semis right now, other than to say, this is just telling me that this market is becoming more and more selective. Let me just see what Caterpillar is doing today, trying to go for that leg D, 395.51 right now. The high of the 26 was 397.22. Today's high is 397.46. So now we've got even Caterpillar at a D. D is the objective in the Chapman Wave buy mode. It should get you at least to the fourth highest peak. That's where other things can happen. There's your peak D that was made back. I guess it was right about the 1st of September, and we pulled back quite sharply. And then we made the cup formation, started a new move, ABC. Today gives you D. But look at that weekly chart closing for the second week above the 382.01 high that was made back in April, May of 2020, of this year. And that's the potential for Chapman. Oh, I didn't type it in. I'll type it in right now. This is the potential for a Chapman Wave, cup, and ladle to leg D pattern. So I always like to type that in, and then I make it light gray, just so it just sits there. You don't have to do anything about it. But so far, this is Caterpillar, heavy duty equipment. This is a good sign, right? So Caterpillar's in a buy mode in the weekly chart, brand new one. Yes, it could be an E, but everything about it is pointing to most probably a leg B. In fact, this action today extends leg E. It's not a peak, it's an E/B. So I like this. I think this is fabulous action. And that's what I've been saying. That's what I've been telling subscribers. This is a rolling upside correction, so that as one sector pulls back sharply, another sector takes over. And I think that's kind of what we're seeing. And I'm anticipating. The reason why I didn't want to be buying the dips just yet, although we are buying today, we bought kind of oil service area. But the only reason why we are buying is that I'm going for areas that are not working. Areas that are by themselves doing their own thing. That's really important. Okay. With that said, let me get to this right here. So another question came in. I didn't see it. So there was a question about CLSK. CLSK is trading at, this is Clean Spark Inc. Now, there was another one, Clean Something, with all the CLs, and I couldn't find, it's one I followed for ages. For some reason, this one pushed me off my thinking for what the other one is, because so the question was, what do I think about it? It's at 9.10 right now, 44 cents. It gapped up this morning. It wasn't looking too great yesterday, but this is what I'm going to recommend. So you see this weekly chart, see this arch formation, an arch formation that said, made a high up in the 24s, pulled back and went sideways and then broke down. So it's like a 1-to-1 to the downside, a little bit more. It says just right at this particular point, this is where if there is strength, that strength should hold because if it doesn't, it's going quite a bit lower. So I consider this to be a lot more risky. It sounds like it's in the right area, and it has a nice 5% pop today, but pops are not good. I want consistency. So I'm just going to recommend that. I just don't have the email in front of me. I had a little trouble with the emails. Whether you're already radio show question. Let me just see. Good. Oh, okay. There's another question. Whether or not you had started a position. If you had started a position, that's the best thing that could have happened, because now you're up and you can negotiate with your stops, etc. But if you're going to get in here at 9.06, I would just suggest start a small position. I need to see at least 2 candles following up to the upside to get to the 10 area. That's a long way to go. So just a nibble at this particular point, and we'll follow it for a few days. I'll even make a note here to look at it. I'll be back. Dow's only up 70.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
CLSK is the symbol that we were looking at. So I'm just saying, if you've done your homework and you really like it, this gap, now it's only up 3%. I would wait. That's all. That's you asked me my opinion, I would wait. The other thing is, if you are I couldn't find it just quick enough to get to it. If you are in it, then I would just say your entry point should also be your stop, because if it gives back everything today or in the next 2 days, you really don't want it. So it's not a good looking chart pattern at all. It's making the dreaded H pattern successful so far. It hasn't taken out the left side low, but it's just been acting very poorly. Clean Spark Inc. CLSK at $9.01, up 35. If you want, you can nibble at it, but I don't want to give percentages away, because I would have to say, if you nibble at it at 9, you really should have something like, I want to see it get going, so I don't even want to risk 2-3%. I'm just going to say I'm stepping aside. All right, sorry, that's all. We can come back to it, but I don't think at this particular point this fits the category. There are others in the area that I think are going to do much better. The next question was, I missed it yesterday, came in late, URA. So URA is, I used to have this all notated. This is the Global X Uranium ETF, trading at 29.87, up 21. So I like this. This is actually one of the better looking charts in the whole. So let me just give you this. This is the Global X Uranium ETF. And as a composite for all the others, I'm very impressed. I was impressed the other day when I was looking at it, and then you brought it up. And I'm just going to say, if you're in it, it gets a little toppy just in terms of patterns that I'm looking at right now. And that's just on a 120 minute to a daily chart, but it's at peak C. If it doesn't make a new recovery high today, I think it's going high. I like it just because I'm looking at it longer term. Well, I have no choice. So now I have to talk about the UEC, which we have, which is the Uranium Energy Core. You see, it made that peak D, excuse me, exactly on target. It missed by pennies, going to the 697 level yesterday. This to me has been a little bit of a benchmark, even though it's the low-priced one, only in that it just seemed to have been behaving well. Then it started to not, but we had great profits. We took them off, and then we went back in recently. So see, 698 in the end of the day. I didn't see it. Made a new recovery high. And this is a single leg A to the upside of the weekly charts. And your question was on Captain Triage, URA. URA. Yeah, I like it. All I can say is, let me show you the patterns that I'm looking at here. In the weekly chart, you see the lower highs. I join that right there. And then I go to the much deeper lower lows, and that becomes a falling axe formation. And what's happened, this is the second week that it's above the line, and that just says that it's met one of the criteria that I like to look for in this particular pattern, and that is to close above once, and if it can follow through the very next bar with a higher high, and especially a higher close, that's really good. So far, that's happening in the weekly chart. So this is a brand new A right here, peak A, and you've got a B right there, leg B. Monthly chart made a peak E. Going to just do this. Gosh, I remember having this all notated, but I remember now. That was the question. This made peak A, peak B, and then it only made a peak C, and then it stalls. And then what happens in this particular instance, you have to look at the pattern, because this is the low that was made down the $6 or whatever it was area right there back in 2020. This is still in a buy mode. It's taken a huge cup formation to get to a brand new peak A, peak B, peak C, and then it made an overlapping wave. Oh, perfect overlapping wave right there. Remember, the cup and ladle pattern is one pattern. This has the characteristics of the same, but it's called an overlapping wave because when the new peak C is taken out and starts a leg D, it activates the previous peak C. That was the one right here, the monthly chart, November 2021 of 3160. And if it goes to 3162 in this leg, it's an overlapping leg D, which is really powerful. It says it should go to the D, then it should come back and test the lip that it just took out on the left side, which it did. And then if it goes to a higher high, how it responds after that is very important. So it's done all that. Now the pattern that I'm looking at is a cup, one of my least favorite patterns, the cup and ladle, the cup and handle, and then it's got this handle right here, which says if it takes out the high that was made after the test of the left side low from back, this was the one in 2021, then it's very powerful. If, in other words, URA, uranium ETF, goes above the May 3366 high, I may as well put that in, of this year, especially if it does it by December, then this is signaling that there could be much higher prices to come, much higher prices, because that 9-period moving average on that big dip, remember we spoke about this, hadn't gone negative. So this is really positive. I like it. Looking out, if you're looking to get in, I'd say I'd get in now. You have to have a much wider stop because I anticipate that this is at 29 right now, 29.83. It's going to go at least 4 or 5 points higher over a period of time looking out. Hope that helps you. All right. Now the other thing that I'm looking at is how does today's action impact the markets? I just got from Eddie. Hi, Basil. Can you look at NVIDIA? Here we go, NVIDIA. NVIDIA Core, semis, GPU, accelerated computing, had a nice pop today, but it's given much of it back at 122.81. It's at a peak D from the previous high, which is back in August at the 130 area, but the major high was back in June at 140.76, making lower lows and lower highs. I just think this is a sideways consolidation. You know, you've got to look at it very differently. In other words, I often get a call from Paul talking about GE has, you talk about the PE ratio, which is GE is fantastic, but they're different categories. You don't buy, if you're buying NVIDIA, you're not thinking of a GE characteristic. You're thinking of a high PE. So I like NVIDIA very much in terms of consolidation, and I'll talk about that when we return. So,
the gold report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So, this is Technical Friday. I wanted to point something out. You see this monthly chart of the NVIDIA, look at the characteristics. You see the way it made a high at 140.70, no, that was the most recent high. Yeah, 140.76 back in June. And then each month, the high has been, look at that. It's like, you can see it here in the weekly chart. It's not 100%, but wow. I mean, how does the price know that every time it rallies, it's going to fail at that particular position right there? Now, I have a theory about it, saying that the tide is turning, and the proportion of exuberance or whatever it is for buying pressure has a ratio to it, and that ratio just kind of poops out right when it gets to the resistance line of the Chapman inside track repellent zone. So here's the question. Hi, Basil. Can you look at NVIDIA and Apple? How do you feel the November election is impacting trading? Could this support your position on a sideways movement in the market until the outcome is determined? Thanks for all your help, Eddie. So, as far as I can tell, the action of NVIDIA, which was the absolute leader going to the 140.76 June all-time high, and the fact that it's come down in this very methodical, almost mathematical way, and now it's forming a triangle, like a flag pattern right there, like a golf flag, one of those pennant flags are concerned, right? So what we're looking at is how does it break out? And I think it's going to have a tough time. I drew that in the weekly chart to say it's got the rectangle within it, it's got the lopsided cup formation. I drew the first resistance of the Chapman inside track repellent zone. It got there. It's running out of time. I just did this and I said to myself, I didn't think this was going to work at all, but I did it because I like to do it for the cup formation, because now I think it has the potential to go sideways. And then at some point, NVIDIA, if it takes out 112 support anytime in October, that is just going to say, hey, just be real careful, because it's telling us that the oil industry of basically the chip sector of the 21st century is just stalling, and this is one of the leaders. So now, with that said, all I can give you are numbers, and I'm going to say if NVIDIA on a weekly basis at 123 right now closes above 132 anytime in October, that's where it really starts to build upside strength. Until then, I'd be careful. 123, 112, those are the levels to what? 132 and 112 are the outside parameters to monitor. I just think it's stuck. That's number one. Number two, I'll get to the other question, but let's finish Apple. So Apple right now is almost in the same category. Now, this is fascinating. There is a chance, this is not exactly the way I like to look at them, but I am going to draw this in to say, yeah, you could make a case that this is one of those stalk leg formations where this is the body, it's just trading in an oval trading pattern right now, not going anywhere. Yeah, it fits the pattern, but actually all I can say is that it's a little bit forced because it really doesn't look like a stalk leg body, but it has the pattern. It goes higher highs, lower lows, and then it reverses and makes lower highs and then higher lows. That's what it's doing. So Apple is stuck in a range. There's a peak C in the monthly chart at 237.23. I think it will go to a leg D above 237.23. I think it will be this year. That's what I'm looking at. I think it'll be in November. We'll see very soon whether or not. But remember, what you're seeing here is reflected in Apple. It's lost its innovation, but it is a company that has a tremendous amount of residuals. Every month it's getting income from different streams, and that's really what it is. It's really an old-fashioned company now because it's really almost like a dividend company in a sense in the tech sector. Unusual. So now the next question is, how do you feel the November election is impacting trading? Well, I don't usually like to put my thinking, if I can help it, boy, it's hard to do, but my thinking, get it in the way of the actual market charts. The market charts, now, so the question is, so I have to look at, just real quickly, I have to look at, because it goes to November, so that's the entire month candle of October and then November. So as I see it, well, first of all, the Dow has accomplished everything that we've been talking about for quite some time, that the technicals were strong enough that 2024 should see higher highs, which is done. The last high was at 42.628 on the 27th. And look, we've given everything back in today's gap up candle. And I spoke about this in the 914 chart. So let's do this. We go to the Dow, and I'm going to use the others, but I'm just using the Dow at the moment. And I'm going to the weekly chart. So you can see the weekly chart making higher highs and higher lows, higher highs, higher lows. It seems to me on the weekly chart that whatever it takes to take the Dow to close below 40,000, and it's trading at 2,000 points higher right now, whatever it takes to get that 9-period moving average to go from green to black to pink under the black line, I suspect it would have to be close to 40,000 or below. So it says to me that if you're looking at the market, look, if I had to ask you, what do you think? First of all, if I had to ask you who's going to win, you would have to give a guess because there's nothing here that I can see in the market itself that says that the market is anticipating right at this moment really bad news. Whoever it is, it'll be really bad news. But at the same time, it's also saying, I'm holding very well, but you're going to have to prove something to me to go very much higher. So let's just exclude, I'm not going to answer your question in terms of politics, which I usually like to do. I cannot do it. I want to talk about it in terms of holding back, the market holding back. I don't think it's going to hold back much longer. I think it's going to have some kind of assessment that says if so-and-so wins, it's not going to be anywhere as bad as whatever one would think. And if so-and-so wins, it's not going to be anywhere as good. And I think that's what's holding the market back. So the answer is absolutely. I think there's a stalling formation. That's why I call it high-level digestive phase. I don't see it actually breaking down, not just yet, but there's so much uncertainty about the result that the market is just, you can see it right in the market. I'll be right back.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, so Meta is trading up 583 at 583.69, up 92 cents, all-time high as we speak. And that's one of the reasons, as we're looking at everything, why I'm saying to you that you've got to look at each stock individually, and they're all doing something. Look, Microsoft stalled. It's not breaking down, but it's stalled, and yet Meta is going to all-time highs, and that's just this kind of market. So I wanted to put that into the packet. One of the reasons why we're staying long, we've got our long positions, don't want to change anything, but we have a little insurance policy, is because I think that's kind of, for money management, that's kind of what I want to be doing right now. PEGA, I had a question about that as we're about to wrap up. This is Pega, if I can read the darn thing. Why is it so difficult to read from over here? Pegasus, it is Pegasus, yeah, Pegasus Systems, or something like that. PEGA, trading up 97 cents at 71.69. Yeah, this is moving high in a very jagged way. So if you're long at 73.69, you need to make sure that 69 support holds. It's doing nicely, but now it's starting to struggle a little bit after a big move up. It's taken this digestive phase. Look, it's taken a little while from 74 to 70. That's 4 points. And the monthly chart, peak A, A, B, C. It's already in leg D, probably a peak D today. But the monthly chart, that's the weekly. The weekly chart is just moving up, stair step, move up. Good. Now, let me just wrap this up. I didn't get a chance to show. I'll do it on Monday. I'll show the Chapman Wave automated support and resistance lines. In the meantime, back at the ranch, let me just do this. The Dow right now is up 47. And I just think that this is the sideways move. This is exactly what I've been anticipating. I did think lower highs and slightly lower lows each time. And that's what was happening. Hasn't happened again today because it popped up, but that's what we anticipated. And that kind of applies to all the others. So the SMHs, the semiconductors are saying, yeah, it's getting difficult to break to the upside, but we're not breaking down. That's the opportunity. Be very selective. Check out Post Before Daily newsletter. We have a wonderful day. Stay tuned for Steve Rhodes and all the great programming.